Are we actually at Euphoria, or is it an octave below Euphoria?
But we're in a bull market. All bull markets climb to some degree, both a wall of worry and certain levels of optimism. The point at which you know you're at Euphoria is when all of the bears have capitulated, and we're not there yet.
There is this sort of renewed interest on the revenue meta of investing in crypto, which as most TradFi people just call investing.
Hi, everyone. Welcome to another episode of Bits and Bips, the show where we explore crypto and macro colliding one basis point at a time. I'm your host, Steve Ehrlich, High Scribe of the Unchained Kingdom. I'm here with a few special guests. For one, returning Austin Campbell, the High Scholar of Zero Knowledge Consulting, and a new guest, Joshua Lim, who is the High Captain of the FalconX fleets. So welcome, Josh.
Thank you. Glad to be here. I'm enjoying my new title.
Yeah, everyone always appreciates it the first time because they never know it's coming. That even goes for me the first time I joined. So, Josh, before we kind of get into everything, and I have some disclaimers to give as well, but why don't you just briefly share your bio with our audience?
Yeah, happy to be here. I run the trading business at FalconX, which is a global prime broker and trading shop. We provide liquidity across a broad range of markets and also bilaterally directly with counterparties, mostly consisting of hedge funds and venture firms, high net worth individuals. Nowadays, a lot of corporate treasuries as well. Almost entirely institutional customers.
Okay, all right, great. And it looks like Ram Ahluwalia, Maester of Lumida, is joining us. So welcome, Ram. We have a full crew here today.
My favorite people. This is great. We got Josh and Austin together, and Steve. This is amazing.
And I have to admit, I'm really happy to be here with all you guys because I'm on pins and needles about the baseball playoffs, and the Phillies start in an hour and a half, and this is
so we got to distract you for a little.
Yeah, this is, and they're already down 1-0, so this is keeping me.
All right, here I'm going to give you a live look at Steve in about 1 to 2 hours.
Probably. As always, nothing that we say here is meant to be investment or financial advice. For full disclosures, please check out our website, unchainedcrypto.com/bits and bips.
Aptos is the no-compromise infrastructure for global financial markets. Fast, reliable, and 100 times more cost-efficient than other blockchains. See for yourself why Aptos is the chain of choice for institutions, users, and developers alike at the Aptos Experience, October 15th and 16th in Brooklyn.
And with that, away we go. Josh, let's start with you. You just came back from Asia from 2049 and some other events. Good time to be out there because last week we were here talking about October and whether or not it was going to live up to its reputation. So far, so good. So what were some of the key themes that you saw out there?
For sure. It was pretty exhilarating to be out there. Honestly, it's something I do every year to try to get a good sense of what's happening in a part of the world that I don't normally have a lot of visibility into. And yeah, this year there were a couple of major themes that were emerging. I will say it started off in a pretty rocky way, right? Because a lot of us were out there at the end of September for the Korea Blockchain Week. So obviously a lot of people were positioned pretty long, going into those two set of conferences, Korea Blockchain Week and Token 2049 in Singapore. Unfortunately, that kind of coincided with some end of month de-risking at the end of September. So we saw a lot of names, actually get hit pretty hard. I think a lot of people were liquidated on the way down. And then that obviously set up a good base for the recovery rally going into Token and some of the major themes there that were emerging. So I just want to call out that there was a little bit of maybe people positioned a little over their ski tips at the end of Sep. What we've seen since obviously has been extremely bullish, and it kind of reinforces some of the things that I learned at the conference. So, one big thing is everyone is sort of all in on this, Bitcoin, to some extent ETH and a few of the other major Solana as a way to get away from the US dollar, basically, right? The dollar kind of debasement trade. And in many ways, crypto is lagging gold and equities to all-time highs. And of course, we got it today, right? Bitcoin hit a new high of 126K. And that, was a long time in the making. And it really took a lot of maybe even like geopolitical kind of wobbles to get us there, including some of the turmoil overseas. You had the Japanese elections and the French prime minister resigning, and of course here closer to home we have the U.S. government shutdown kind of overhanging all of us. And I think that's sort of the big theme, right? Is there's this sort of asset that doesn't have any sort of sovereign overhang. It can operate sort of independently. It's uncensorable, and it serves as a way to sort of protect your assets against inflation. So that's been like a big theme that we're seeing, and the rotation is really just starting now with the Bitcoin on that side. And then on the sort of like top 10 alts, right? Like the theme was around upcoming ETF listings. You already have the tailwind from the DATs, the digital asset treasury trade, a lot of inflows coming in from there. And we're seeing a lot of the sort of second order effects, right? So once all these assets are sitting in the ETFs, sitting in these digital asset treasuries, what benefits? It's really, things like lending protocols, things like staking, staking tokens, LSTs. All of these things are going to be ways to deploy capital for these treasury managers directly on chain. You've already had a couple of the more forward-thinking managers, pretty explicitly say they're going to take those Solana or those ETH and deploy them in some yield-generating way. So we're seeing a lot of that. It starts obviously in the more kind of benign ways, like trading options with a regulated counterparty or on exchange, or CME options, things like that. But then it can become much more complicated, or in some ways much simpler, right? Like if you're just staking an asset and you're generating in a protocol native way, generating yield in a protocol native way, that's something that is justifiable and pretty easy to explain as a CIO. Those are some of the high level things. I mean, there's a lot of things going on under the hood, right? There's the rotation trade happening into stablecoin governance tokens like Athena and some of the other ones. We heard repeatedly there are a lot of funds that are just had historically operated as market neutral vehicles or quant strategies that were thinking about launching more complex actively managed strategies under the guise of like a stable coin wrapper or some kind of like stable value on-chain, token. There's also a lot of focus on perp dexes. We kind of saw that with the explosion of Aster as a competitor to Hyperliquid. But there's maybe 3 or 4 other tokens that have seen, a healthy appreciation, like 3 or 4x from pre-Asia conference levels. And a lot of this is just, it's really hot money that's kind of rotating across these assets. It's really money that would have been in meme coins, like not that long ago, right? Like kind of things that we're launching on Pump.Fund. But there is this sort of renewed interest on like the revenue meta of investing in crypto, which as most TradFi people just call investing. There's a lot of that happening right now, and a lot of rotation going to tokens that could potentially generate revenue from actual utility. So that's kind of exciting. Those are kind of the main themes.
Yeah. All right, let's pour one out for the meme coins. Real quick, I want to go to Ron, but before, Josh, like your team came out with a report that was talking, I guess it was today or yesterday, about how the options market is now driving spot price when it comes to Bitcoin. I was hoping you could just briefly touch on that.
Sure. I mean, it's pretty clear that there's endless appetite for options in Bitcoin, particularly. Like you can kind of see it in the growth of IBIT options OI, which surprisingly is in a year and a half has exceeded the open interest on Deribit. So there's just a lot of demand out there for people to use these instruments to hedge and also to generate yield. We're starting to see pretty significant movements going into major expirations. So like that end of month expiration in September is a meaningful one to take note of, right? There were several $1 billion of options that rolled off at that point. And it's really every quarter you see a lot of those options roll off. And that is generally going to have some vol increasing impact because, you know, a lot of the options that have been sold into those expiries as they roll off, there's a lot less gamma supply within dealer hands. So meaning like dealers that own a lot of options no longer own them. And so it really loosens up the market a little bit for the spot price to move higher or lower dramatically, like post expiry. So that's kind of like one theme that we're seeing is, I would say if you asked me a couple of years ago, I would have said not a chance. You know, the spot market and the perp market is a lot deeper than the options market, but we're at a point now where that's having some meaningful impact on spot prices.
Got it.
I would also hop in here to say, as we think about that sort of dynamic, if you want to see clues as to where that activity is coming from, we see the same thing in a lot of stocks that U.S. retail like to trade in the United States, because especially when you're looking at relatively short-dated option expiries that constantly roll on dealers, exactly as Josh was talking about, you see that phenomenon driven by U.S. retail specifically. I mean, we saw the same thing in like the whole, you know, GameStop and then after phenomenon with retail stock trading. And it should just tell people something about, call it, Bitcoin entering into a new regime compared to a lot of the other tokens that we're dealing with. Like I would tell you at this point, Bitcoin is mainstream now, right? You're starting to see retail trading. You're starting to see institutional trading. You've got all of the crypto natives trading it. Like this is disseminating into the world in a way that maybe we're not seeing yet. Josh, I'd be curious as to your opinion with a lot of the other tokens.
Yeah. I mean, not yet, right? Like there is a robust, you know, altcoin options market, but that all exists in crypto world, not in TradFi world. I think that maybe the closest thing that trades with that much interest is like MicroStrategy, because there's that MicroStrategy yield ETF that sells a bunch of options on MicroStrategy stock. But yeah, like other altcoins, not really as much.
All right, cool. So Ram, let's come to you. Josh mentioned the debasement trade. That is a very nice segue to a debate that you had with Vinny last week that was very well received on sort of the competing merits between gold and the S&P 500, and sort of like unstated within that whole debate is where Bitcoin fits in. Gold's still going up, Bitcoin's still going up, stocks are still doing well.
Yeah.
Been 4 or 5 days since that debate, Bitcoin hit all-time highs. What are your kind of takeaways from that conversation, and what are you seeing right now?
Yeah, well, I think Vinny's up 2 days in a row on that gold versus S&P, so I don't mind holding myself accountable to this. I got 8 months and 28 days to go.
Yeah, you still have a while. For anyone who did not listen yet, Ram bet Vinny $10,000 that the S&P would beat gold over the 9 months from Thursday to July 4th.
Late momentum moves, you often kind of see that, as Josh and Austin know too. Late momentum moves, they keep going up and up and up and up, and then that's it. So timing this is always hard. But this is a chart of on the topic of debasement is USD JPY. So the funny thing about this is a trade. This is US dollar Japanese yen. I could tell you a similar story for DXY, which is like a trade weighted approach. Look at the dollar. But the headline around this is that actually the dollar is increasing in value. So the debasement trade is a trade that's alive and well, but it's actually not about dollar debasement. It's a narrative that got momentum and legs underneath it, and it's continuing. That's it, which is fine. That doesn't make the rally less legitimate, actually. You start with an idea and a concept, gets rooted in people's minds, and then assets start to attract momentum, and it keeps continuing. I see the same phenomenon on small caps. You know, it started as rates compressing and companies can refi. Now those assets have momentum, and they're going to keep rallying, even though the 10 years come down to 4%. It's kind of leveled out here. So I don't think this is really a debasement trade. People like to call it that. What it is an asset revaluation. This is animal spirits. This is excitement. We're entering the fourth quarter now. And things could get really nutty here in a bullish way. It's really people are marking up each other's bags is what asset revaluation is. That's what that means, right? Someone moved into the neighborhood and they decided to spend 30% more on the house in the neighborhood. So all the houses are worth more, and everyone's agreeing each other's houses are worth that much. So everyone's wealthier as a result. That's what markets do. That's how markets create wealth.
Do you see it as just animal spirits, or is there anything more substantive behind it? And
there's a couple other drivers, of course.
Yeah.
I mean, this is what's the meme for this? Like, the right meme is the person in the face who's in anguish and smiling, whatever, one of those things. Like, this is a pain trade rally. It is a hated non-consensus rally where a lot of people look. I saw a study. We see a study come up once a month where people interview on the, what's your view of the economy? And if you're Democrat, you think the world is ending. If you're Republican, you're like, oh, wow, this has never been better. It's only getting better. We're addressing issues. And the people on the Republican side are optimistic about the future. People on the Democrat side are not. Historically, we haven't seen this. If you go back like 10 years before, we haven't really seen that. Maybe we have during the George Bush era. I don't know. But historically, to my knowledge, we haven't quite seen that. Austin will correct me on the history if I'm wrong around that. But overall, this is a people caught off sides story, right? They studied in school, tariffs were bad. The cause of the Great Depression was tariffs, and now they're off sides. And, you see it like objectively and measurably in long short positioning, for example, which is the data set I look at like every week. And the percentile exposure is 50% of their historical 3-year exposure, meaning they're underinvested while markets are hitting all-time highs. So they have to buy every dip. If they don't buy a dip, they look silly to their LPs. Why don't you buy the dip? Like, if they could go back in time and get long stocks, they would. So it is when you look at a chart, what you're seeing is emotion and anguish driving this higher. The other thing I would say to this, it's a really interesting there's so many cross-cutting dynamics that are at work in this market. Here's another one. So the consensus earnings expectations, the S&P, have been steadily coming down over the last month and a half, just as credit spreads have widened and there's been fear around non-farm payrolls and are we in another recession, which is not going to happen, okay? But probably you're going to see earnings beat that 6%. Last quarter, earnings came in year over year like 12%. So suddenly we think that we're going to advance one quarter and year over year we're going to drop to 6%. No, that's not going to happen. We're going to hit 10% or 12% again. So all that's super constructive. All that's very constructive. So it is an interesting time though, like, because you're seeing these, like, you saw the AMD deal this morning, right? OpenAI got like 10% of the AMD. I want to dig into that transaction more closely. Essentially, AMD gets an anchor customer for their inference chips in OpenAI, and OpenAI gets 10% of AMD. AMD stock went up, and OpenAI has got these warrants, like, so their stock theoretically has gone up too. Usually, there's a loser in one of these trades, but both went up. It's that kind of market. It's a funny market, right? So, yeah, look, I think you might have a scenario like where at Q4, like I could see S&P above 7,000 by year end. I could totally see that. I do think dips will be bought. There's a lot of local over positioning, and Monday rallies are kind of like shitty rallies, to be honest. So don't overread into them. I think it's good to have Josh as you, because Josh is from FalconX. I don't know if you had a chance to introduce FalconX, but like, you're at the flows and you're helping to cross markets and you're seeing what institutions are doing. I think so. You provide a lot of good market color there. And I always like talking to people like Josh regularly because it's a different data input than you might not ordinarily get just looking at like research and other elements there.
Yeah, Ram, don't give away all my reporting secrets.
You got it. Mum is the word.
Yeah. No, we went into it a little bit at the top of the call, but I honestly feel like the amount of excitement and almost euphoria in crypto is it's near a high for the year, and I mean mirroring the price action. But I think it's partially because there are ways to outperform now, just given the amount of sectoral rotation happening within crypto assets themselves. So it's like these fund managers historically could outperform by just being ahead of the trends and sort of like hearing things, quote unquote, from other people and moving capital faster. And those opportunities exist again, right? Like we already talked about the stablecoin trade and the perp dexes, but Even in the last couple of days, you saw this new emerging narrative around privacy tokens, which has really gone unnoticed by a lot of people. Or hey, unless you're kind of deep in the weeds and you're kind of watching, top 1,000 altcoins and seeing what's outperforming, like things like Zcash is trading at like $160, and 2 weeks ago it was like a $40 token. So these things that have been forgotten for 5 years or more are coming back. That's really exciting.
Right.
Yeah, there's a lot of dispersion. Yeah, a lot of dispersion.
Do you see, like, back to Euphoria? I mean, that's one of the things I always look for as a sign of like market tap. I don't think we actually have that. If I look around just markets broadly, I don't see that. I think people have a lot of, there's still fear, there's still people off sides, but you made the qualifier in crypto markets.
Yeah.
So, I think a lot of funds have lagged Bitcoin in crypto. So what are they going to do now? Are they like forced in a performance pace now? Or like what's their, what are the top 3 moves? It's like revenue back to the DAT trade seems like it's mostly in the rearview mirror now, although some of them are really starting to work in recent months. But people have realized that like you don't need 97 DATs. You just need a handful that liquidity and a good meme person to lead it. But are we actually at Euphoria, or is it an octave below Euphoria?
Yeah, octave below is probably the right way to put it. It's almost like I could see a path towards later this year or even in Q1 of next year, like a real blow off top type of move in crypto. And we're not quite there yet. We just broke all-time highs, right? So, and the money, like you said, is not really in crypto, and it hasn't been for the last year or 2 years. It's been in equities. It's like all the speculative capital is trading, meme stocks and AI and the quantum computing narrative and all this other stuff. And now it's like you could see all of that come flooding back into crypto, and that will meaningfully move asset prices for our little corner of the world.
Josh, what do you think is behind the privacy? I was actually just looking at Zcash and Monero and NIMS.
Yeah.
I think Rob, maybe Austin, like, I've had my heart broken too many times over privacy coins because it's one of those things that I wish people valued more. And I actually wrote a story on Zcash back when I was at Forbes, and I know they didn't like it because we called them a zombie token, even though I said I was rooting for the project. And why is it? It's up 225% in the last 2 weeks, but the other tokens haven't moved all that much. I'm curious if there's something I'm missing, because I would love.
There's a couple of things. There's like, one is people now are realizing that the sky's the limit again when it comes to crypto valuations, right? For the longest time, you're like, well, is this thing really worth like $10 billion? And with hype trading where it is, and then like all these perp dexes starting to move again, and people are realizing that like you can actually start putting like huge amounts of multiples on things that are revenue generating, and then if it's not revenue generating, you can even put higher like L1 type valuations around things. So it's all coming back. I mean, like these are things that have been forgotten, like you said, for many years, and they're all trading at 200, 500 million FDV, while there are new tokens that are gaining traction today that are like 10, 20 billion FDV, right? Think about something like Plasma, right? Plasma just went live like a month ago, and it's already achieved like a $10 billion FDV, right? So it's one of these things where it's like we're all remembering again the animal spirits that happened last cycle, and now everything's getting re-rated higher. I think that's a big part of it.
Okay, cool. All right, so I want to keep the conversation going, but we need to take a very quick break to hear from one of our show sponsors.
Over 3.4 billion transactions processed without disruption. More than $1 billion in stablecoins circulating. Over $720 million in real-world assets tokenized on-chain. All delivered with sub-second finality, block times under 100 milliseconds, and fees less than 1/10 of a cent, making Aptos more than 100 times cheaper than other leading blockchains. Built by the team behind the DM project at Meta, Aptos is what blockchain performance looks like when it's built for global financial markets. Discover why global institutions like BlackRock, Franklin Templeton, and NBC Universal are building on Aptos, and see for yourself at the Aptos Experience, October 15th to 16th in Brooklyn.
All right, Austin, what are your thoughts on what Josh just shared?
Yeah, so as I was sort of noodling over Josh and what Ron was saying, I think there's a couple of things that are colliding narratives that are producing the current price action. So one, especially when you look at Bitcoin, don't just look at the United States, right? Like, it's important to remember the bid for Bitcoin is global, and a lot of it historically has come out of Asia. So we just had kind of a surprising election result in Japan, and I will summarize the economic views of the new prime minister there as let's run it hot. And if you're looking at that and you're looking at Bitcoin starting to go parabolic as you're having these sorts of moves, I do think there's a certain element infecting like all of this, which is the debasement trade that we've been talking about, right? It's important to remember, if we really believe it's the value of fiat money falling, then in price terms, everything should be rising. You know, witness, for instance, gold also like really cranking up at the highs that you see Bitcoin following. Right. Two is, as Josh said, crypto this time around has not been the leader. Gold went first. Crypto is like backfilling into where gold and equities have already gone. And if you believe that, that means if you're an alt season person, we're going to see at least some of these either old coins or some of the new ones like, say, Plasma or Aster start popping off occasionally as well. Like, that sort of price action is not totally shocking to me. And it's one of the things that I think people misunderstand when they make comparisons about these regimes. Like Ram earlier brought up like tariffs as the cause of the Great Depression, and I would remind people we were in a deflationary environment already after a credit shock at the time the tariffs were hitting in the Great Depression, and you could think of them as trying to defend the gold standard and preserve the value of money. Here they're just throwing the value of money overboard. They're basically like, no, we're gonna just keep doing this, nothing stops this trade. And so in that world, the correct answer is, you know, and I think we're seeing this in the options market as well, get long hard assets and risk assets, probably using moderate amounts of leverage if you could borrow in like dollar denominated terms and go buy things like Bitcoin. And as a result of that, as I look at the market action, I'm not seeing a lot of things in, call it Bitcoin or gold, that yet speak to euphoria, right? Like, we're not seeing like, you know, cab drivers being like, I'm retiring, I'm buying a condo, it's all over, like, we're done levels of euphoria yet. We're definitely in a bull market.
You should have been listening to Vinny on Thursday, Austin. Yeah. That's where he was.
Yeah, no, but we're in a bull market. All bull markets like climb to some degree both a wall of worry and certain levels of optimism. The point at which you know you're at euphoria is when all of the bears have capitulated, and we're not there yet.
Yes, I agree. Just sharing a screen here again. This is the Invesco commodity index, and what you can see here is that it's really gone nowhere. You know, in a year, it's actually lower than levels we saw from 2022. So if you look at the holdings, this includes various commodities such as gold, silver, copper, corn, crude, soybeans. So what's the point? The point here is that I contend this is actually not a dollar debasement rally. That's the narrative. Again, it doesn't disqualify the nature of the rally. Gold is rallying, but like oil is at $60 a barrel. If there's dollar debasement, then the core energy source that runs the real economy should be repricing higher. In real terms, it's not. Oil's at $60 a barrel, right? This is momentum and traders and trends and trend following. That's what this is.
What do you see as like the limits? Like what are the key thresholds to look for next?
I think what Austin said is exactly right. When there's no bears anymore, when does Jim Chados cover his Bitcoin short or MSTR short, right? I mean, how is MS? We gotta check it out. Has someone sent like someone's got to do like a safety check, or kind of a neighbor's got to visit, knock on the
wellness check? I think that's what you're looking for.
You know, like, Jim, are you okay? Check. You know, send him a gift basket to his office. we can put in some calls in MSTR to hedge them out a little bit. I would check on Jim Chanos. If Jim Chanos has to cover MSTR, that would be actually when the short starts to work.
But short of that, are we in like new price discovery mode? Or are we just still in like a general like?
I think it would be good to get Josh your perspective. I think you are. You're at all-time highs.
Yeah,
you're all-time highs. So yes, that's what it's supposed to happen now, and that's every single day you are now in price discovery.
Yeah, I mean I agree. I think by definition, right? We're through all-time highs. Like people are trying to figure out where supply comes back in. And we've actually worked through a lot of supply issues, right, in the last couple of months. There was very famously like the $8 billion of like stale coins from a long time ago that were sold into the market. And a lot more like that, right? Just like old coins moving and getting liquidated. And the market's absorbed all of that pretty well. Like we stayed well above, really like the 110 level in Bitcoin throughout the summer. And I think we're at a point now where there is this latent demand for just something that's not dollars, basically. I mean, yeah, maybe it's not a dollar debasement trade, but there's something happening. Yeah. There's like a desire to get into real assets, like hard assets, and things that are not necessarily tied to some of the political uncertainties.
I agree. I can go around
like fiat.
Yeah, go ahead. Yeah.
This is what I wanted to push back on a little bit of the like momentum versus debasement thing too, Ram, is that I want to go back to what I said about this isn't only a US dollar trade. You are seeing things like food inflation in Japan. Right. So as we think about re-rating, especially with regard to Bitcoin, I would really urge people don't just look at dollar inflation for that one. Like it is possible we're going to have different things going on in the US economy than elsewhere. And that could drive like more than stocks. That could drive Bitcoin. It is much harder for people in Asia to buy US stocks in size at like the retail level.
Fiat debasement, maybe, if that's the right way to put it.
Oh yeah. Fiat debasement. You should still see commodities rally if that's the case, though, versus dollar, right? So,
yeah.
And certain commodities are, like gold.
Yeah. Well, what do you guys make of like this doomsday narrative that I'm seeing on Twitter a little bit, which is why people are going into Bitcoin and gold? I think there was a report from Arca that was talking about it. Is that just like cheap marketing speak and taking advantage of an opportunity, or do you think there's something there? I mean, it kind of speaks to Ron what you were talking about a little before, that people were kind of like clenching their jaws. They hate this rally, but they have to chase it.
I think everyone that needs to chase is latent buying power. That's what it is. So I think dips will be bought. There's a lot of changes happening in the markets now. Like you pointed out, Josh, like the IBET options are larger than Deribit now, which is a massive statement. So BlackRock has about $100 billion in IBET now. So $100 billion of the Bitcoins in IBIT, they make 10 bips off of that. So you wonder, like, is Citadel making more money off of IBIT's options market than BlackRock? Maybe. It could be, right? So the ecosystem's just starting to shift now. You're starting to center around BlackRock and their options market. Coinbase put in a bid to acquire Deribit. I don't know if that transaction closed.
It's closed, yeah.
It's closed?
It's official. Deribit changed their official color scheme to blue.
Interesting. Have they opened up that market to retail investors, or are they still going through CFTC?
It's
international.
Yeah,
it's still right.
International market. Yeah, not US yet.
And what do you make of CME launching or planning to launch 24/7 crypto futures and options? How does that fit in here?
Yeah, I mean, it's not that much of a stretch, right? I mean, they're just adding weekends basically. It's big for traditional markets for sure, and I think that was like the biggest like crypto native angle that most firms had. Was like, hey, we're opening our markets even on weekends for traders. And I mean, I also think that trading, like TradFi firms, are going to hate trading weekends. Like, they're going to have to hire more people to hire, to cover Saturday, Sunday, things like that. But yeah, I mean, that's just the first step. Like, I think the bigger thing will be when, equities are going to be trading 24/7, and that's actually going to be a hard problem to solve for most people. I guess once there's like more venues that are trading around the clock, there'll be a natural like base of liquidity. But right now, it's like, where should some random like mid cap name in equities be trading on a Saturday that, especially if it's like linked to things that might be happening in geopolitical realm? It's anyone's guess, right? It's very tough.
I would also say I think this aligns with a trend we're going to see across markets that, while related to blockchain, is not specific to blockchain, which is things moving to 24/7 in general. Like, there are a lot of places now that, for instance, have 24/7 real time, like money movement. So one of the preconditions that you end up with for actual effective trading 24/7 is you need to be able to, pay for something. Right. And so you get into this sort of iterative upgrade cycle where as underlying money movement moves, then you tend to see trading instruments move because, like, oh, great, I can agree to a trade but can't settle anything for T+2. Kind of makes weekend trading like academically nice, but not nearly as powerful as it could be when also I can settle the trade at like 3 a.m. on a Saturday. Right. And so one of the things that blockchain technology is going to do to traditional markets. So if you're looking at investing theses, like people at the intersection of this, like the Coinbases and the Robinhoods and Citadel, are all very interesting sort of objects to monitor, are the ones that can benefit from sort of this upgrade cycle across financial markets. Because I would tell you, my central opinion is 30 years forward, everything is trading 24/7.
Yeah, and that's the vision of NASDAQ. That's the direction of travel.
The right meme here is the North Korean farmer meme. It's also tiresome if we're all going to be around the clock trading every asset in the world. No more breaks for traders, I suppose.
It's no good for cortisol levels and sleep, and and not good for overall health.
AI is going to be trading it all. Why are you guys worried?
AI will trade it all, which is another way of saying Citadel again, right? So,
by the way, that story I wrote last week about zero gravity, that I know it's not made many friends in the crypto ecosystem. One of their value adds in that investor deck that we obtained is that they're going to use an AI agent to rebalance and manage the investing of the zero G tokens that they're putting into the machine or into the company. So
what could possibly go wrong as somebody who's maybe helped at a place that had algorithmic trading strategies before? This will be.
Well, there are a lot of venture funds that are raising money now. Venture funds know when to raise money. You raise money when everyone's in the money. And there's quite a few that have recently announced closes of new raises. That's good for the ecosystem, like longer term, right? There's more recycling of capital. It goes back into the ecosystem. Never been a better year for them to do that. And they really couldn't have in the last few years. They didn't have much to show for it. Now they have, points to show for it. But I do think, like, the proliferation of DATs and all the rest, I thought, Josh, your point around, I think we are like an octave below off top, but sometime in early next year, or maybe Q1 next year, or maybe towards year end, I think it's worthwhile to prepare for something like that. There's just so much issuance out there. Like, who's not in that? Well, I guess there are people that aren't. There's really two segments of capital. Like the left behind crowd, that clenching teeth, that are buying every dip and waiting for the cracks that doesn't show up, right? Then there are the folks that are in and have more confidence now because they're up a lot from the April lows, and they just keep pressing it higher, right? So that momentum just keeps pressing higher, and this crowd has to buy the dip, and maybe they'll short, but then they get squeezed out and it goes higher. You look at like quantum stocks, for example. I've talked to a number of money managers in the last week around these quantum stocks. Virtually everyone I know is just waiting to short the hell out of these things. They're just waiting, but they aren't really doing it yet. Even myself, like, I'm in, I'm like, oh, it's not working. Okay, get out. Just wait. You put a foot in it, it's not working. I'm out, right? But there is going to be some moment in the future where everyone has this recognition moment. We're like, oh yeah, it's done. right? When does that happen? What does that moment look like? I would keep an eye out for that. That moment will happen on social media, though. That much I'm 100% sure of. But there's a meme this weekend about how they took like the headquarters of all these quantum stocks. You guys see this? It's like they looked at the HQs of these quantum stocks, like one's like above a dry cleaner in Midtown somewhere. Like it's like these random buildings in the middle of nowhere. Like no, clearly they're not into any quantum qubit technology. Next to like the corner bodega, right? So, I thought, gee, like maybe that's the moment, but no, that's apparently not the moment. So it's a super interesting time right now. Definitely 2021 vibes, but I think, yeah, between now and year end, you should be bullish overall.
I will remind people that the thing that cracked the original tech bubble was when the CEO of Cisco finally guided down. So again, as you're looking for when are we in a blow off top, what are symptoms that were there? It's all the bears have given up. The fact that Rom is still trying to short quantum stocks tells you that we have a way to go, right? Like that as indicative and has value because he's somebody who's thinking about these things and has not yet given up on how stupid the retail people are going to be pushing this to the moon. And they have a lot more potential power to do that. But number two is insiders start to defect from the consensus, right? Like, let me tell you what would crush the entire market right now is Saylor comes out and goes, I'm going to hold off buying for a while. I don't like how Bitcoin looks. I'm not saying he will do that, but my point is it's when insiders who have been part of the cycle guide down is another.
I agree. When insiders say enough is enough and this is stupid and we were the fanboys all along and we think this is silly. So there are 2 points, right? Like what broke the .com cycle. One was missed earnings estimates and shifts in guidance, to your point. That was one. The second one, like what started Black Friday, there was an article in Barron's and it just laid out how all these expectations were just silly and absurd. And we didn't have social media then, but it went the equivalent of going viral, like most widely read article on the internet, And that was like that recognition moment. And then people said, okay, this thing is,
I feel like in this case, though, we need to sort of bifurcate crypto with tech and general TradFi, because
back to the bifurcation we were making earlier, I think these things are blending together a little more. And the correct bifurcation here is certainly Bitcoin is behaving differently than a lot of the other tech stocks, right? Like I could totally see a world in which we hit this blow off top, and yet because of the backdrop fiscally, Bitcoin and gold continue to do fine, but it's a lot of the altcoins that get wrecked. So I'm just saying I would be careful about saying crypto is one thing at this point, at least without taking
fair enough. And that's a good clarification. Yeah. I was actually going to talk specifically about Bitcoin. I mean, we've all been in crypto for a long time, and I'm sure we all remember Black Thursday in 2020. I was a Kraken at that point in time, and I think Bitcoin dropped below 4,000 or something, and we were all furiously just trying to buy it because we're like, you know what, if it goes to zero, we're out of jobs anyway, and let's just go down with the ship. And I was angry at Coinbase because I hadn't bought in a little while and they didn't accept my credit card, so I wasn't able to buy anything. But there's just this religious fervor about Bitcoin that I can't. I mean, we're all joking when you talked about Saylor capitulating, because there's just no way that would ever happen. There's just no one. I know plenty of Bitcoin billionaires that have already said I'll buy any Bitcoin at a certain price. If people want to sell out, it just has that type of religious fervor. But on the stocks, I mean, sure, it's. And when that unravels, that thread gets pulled out, or the pin gets pulled out of the grenade, when all this stuff comes down, because nobody I mean, Nvidia would be damned. No one expects them to be able to cash the checks that are being written right now in terms of earnings. I don't know, but there's that saying that being early is the same thing as being wrong, and how do you time that?
And you still have good catalysts ahead. The Clarity Act is still coming, right?
Well,
you still have future IPOs that can happen. I think we've had one hell of a run on IPOs, and you're starting to see weak performance from IPOs, which is another kind of warning sign. Figma had a big pop. Now it's down a lot from the pop. So when retail investors get burned on those bets that they're caught into, then they become twice shy. So those are things to look for. But again, it's also Q4. So they also know, everyone's a trader now, right? So it's like it's going to go. It's like self-fulfilling prophecy time, I think.
Is Gemini still below its IPO price?
Oh, let's take a look.
Because I feel like, I mean, if they are, they're like the one outlier, and they're a crypto firm. I mean,
It's a ticker.
I think it's GNNI.
GMI.
GEMI.
It says Gemini Space Station.
Yeah.
Okay. I thought I saw. I was like, is that? If you put
It's up. I think it's still up.
I know it dipped, but I don't know. I haven't.
It depends how you measure it. Like there's the IPO price, then the close of the opening day. Man, I don't know what it opened up at.
So what we're saying is it's gone sideways.
Yeah.
Right. So you got this. You've got Circle, which hasn't hit their unlock yet. This could add future pressure. You know, the unlock is like 6 months. Obviously, it was a great IPO, but then you know, you can see it still hasn't approached the unlock yet. You know, CoreWeave went through this process already. It's on the other side of that. I'll show you a quick example. This is CoreWeave. The unlock date was this day here, September 3rd. See that big red line there? That was also the bottom. Right now it's up like 30% or whatever the price changed since then. So that's going to happen for some of these recent IPOs in, call it like 4 to 5 months time, because it's some of these issued a few months ago. So that puts you into like Q1 next year.
So are those good short opportunities for companies, people that don't want to get caught off guard?
Well, I wouldn't do it now. That's in the later bucket. And if you do that, you should position size very small.
Okay.
Or you've got to be offsetting with other stuff. Like Circle is an interesting case there because it's not clear how much of their revenue they retain long term. Like there's a lot of competitive trends like working both for and against them simultaneously. I would certainly say it's not an obvious short. Yep, but kind of in the same way, like, so to go back to our Bitcoin comments, like actually there's a really obvious time to short Bitcoin if it ever happens. And that's when the US government gets serious about the deficit and balancing the budget. That's when Bitcoin's going to get fucking shelved because the debasement trade is over. But until that happens, that's not a thing. And so it's important to understand, like, what is the fundamental story here? For me, what would spook me about Circle is either rates going precipitously down because that's driving the majority of their profitability right now, or thanks to Genius, we actually see people coming in with distribution at scale who just start absolutely clubbing them, right? Like if Amazon partners with somebody that does a stable coin, I'm terrified for certain.
Well, that's going to happen, right? They're going to internalize their own stable coin. Walmart's going to attempt to internalize as much as they can, right? The big banks. Like I think Circle is in a tough position for all those reasons. Like competition's coming. It's almost an axiom after Newton's third law. Like stablecoin competition is coming.
I'm really interested to see what Stripe does if they decide to launch their own stablecoin to sort of be native to their what's it called, Tempo, their blockchain. I know they created a white label service to let their clients do it, but there's just so much money in running stable coins. I mean, I'm guessing they're going to take a cut of whatever white label stable coins they help create, but it seems like a very easy way for them to leverage their scale before they let someone else do it for them.
They have an ability to do some things there that people like Amazon don't, though, right? Like I'll remind everybody in the Genius Act, if you're a publicly traded non-financial company, you're prohibited from having a stable coin without some pretty exceptional approvals that I have doubts will be granted to anybody. And what that means is, so Amazon will be white labeling somebody's stable coin and or just using somebody else's. And by the way, that's not to say they're not going to strike a deal like Coinbase has with Circle to take a huge amount of the economics. I think they totally will, because the lesson of stable coins so far has been distribution is king. But what it also means is these things are going to be more either interoperable or fungible than people expect. We're really building another base layer for money, back to my earlier comments on 24/7 money movement. And so as you're looking at where the value accrues, and part of why I look at Circle and I'm like, I have questions, is I'm not sure that goes to, call it, the public utility layer. It might end up going to.
I 100% agree. So Amazon will pick a coin other than Circle because Amazon wants to be a super app. Coinbase wants to be a super app. So they're competitors.
Yeah.
So you're right. And you're right. Austin's right. Amazon will king make some other stablecoin issuer. Who is it? Is it Paxos? I don't know. those are interesting things to think about. Like maybe it's Paxos, I don't know, like, or de novo entity that is focused on meeting the needs of Amazon and their peer groups.
Maybe Amazon will just auction off the ticker AMZN or USD AMZN, and then just see what happens there. All right. So one other thing I wanted to ask about, maybe Austin, this is again, I want to start with you. Coinbase applying for a banking license. What's the play you see there?
So I will note specifically Coinbase is applying for a trust bank license. Like, it's important. Banks are not monolithic. There are a lot of different subspecies within the family, so to speak. That to me feels like Coinbase is looking at custodial applications. They're looking at clearing applications. And if you're a company that's expecting everything will be tokenized, if you're like, yeah, and I want to be the guy holding all that stuff or like doing all of the transit work, this is exactly the kind of license you would get. They're not going to become an IDI, aka Insured Depository Institution, where they're going to be going and getting FDIC insurance and like taking tail deposits through that thing. So like, let's be very specific about what they're doing there. But it tells me, back to your super app point, that Coinbase is thinking of themselves as, how do I start getting myself into the conversation of taking our sort of 1970s era paperwork crisis Band-Aid solutions and massively upgrading them, and I want to be standing at the nexus of that.
Do you guys have any thoughts, Josh or Rahmed?
Yeah, I agree. Look, it's a payments play. Brian Armstrong, CEO of Coinbase, has always been focused on payments, and I think the OCC license helps them in payments. There's 200 other fintechs that want an OCC charter too. It's a highly coveted thing, and the administration will be granting dozens of these OCC licenses. A few years ago it was just Anchorage. I think one other bank that got the OCC. Think about how hard it was to get an OCC chartered. OCC charter. Now you're going to have dozens and dozens and dozens, and I think they're trying to issue as many as they can before the midterms. So if you want to get something done with the bank and a bank license, now's the time.
Yeah. One other thing that caught my eye too, Galaxy kind of launching a retail focused like trading and savings app. That wasn't something, I guess maybe I was mistaken, but that wasn't something I necessarily saw on my bingo card. They have
what's going on there? I think
I don't know.
Or you're retail, or you're both.
Or you're an AI data center company.
Yeah.
The Galaxy story it's first of all, it's been a great asset. It's done incredibly well. Like, hats off to Mike Novogratz and the team. We have many favorite people there, like Alex Thorne, who's been on the show. We'll have back on again. But there's so many things going on here, right? Like, you could tell it's run by a trader. These are traders operate, right? Traders like, hot thing go, AI data center, Bitcoin miner thing. Let's get that one too. Retail trading app. I'll have some of that. When can I issue stable coin? It's a trader on organization.
Yeah. It's
So what we're saying is Galaxy is the super app.
I guess they're trying to. It's curious. I mean, they hired Zach Prince a little while ago. I mean, that,
Founder of BlockFi.
yeah, like this was kind of like what he did at BlockFi, and I mean, notwithstanding everything that happened with BlockFi, he built a really good consumer brand that had a lot of loyalty, and so I wonder how much of a role he had in putting this out. But it costs a lot of money to build. Not to build a retail brand, but to actually market it and get that client base. I'm curious. I'd love to know what the economics were of that, and how that
they have shareholders, and those shareholders can be customers, and this is what we've seen with Robinhood. Customers are shareholders. Shareholders are customer. It's read, write, own.
Well, I think it's a little different, right? This is maybe more akin to like Goldman Sachs trying to launch like a retail operation, with acquiring like retail deposits and the credit card stuff, which like I don't know. I think if you ask like people internally at Goldman, I think it's like pretty mixed reviews.
Fundamentally well.
Failure.
That's why they're trying to get out of Apple.
Goldman's Marcus foray into retail is a complete failure and disaster. If they could go back in time and not do it, they would. They sold the credit card business that they do with Apple to Citibank. It was off customer. It made no sense at all. And by the way,
but that's the analog, right? Like if you talk to Novo, that's what he thinks of Galaxy as the Goldman of crypto.
But I would pause people here and remind everybody part of why Marcus was such a fiasco is something Galaxy doesn't have to deal with, which is the entity segregation rules that you're dealing with for customer deposit taking when you're a bank. Like, that is one that I think is very, very niche, because unless you're a very specific kind of commercial bank that also has a large trading arm, it's hard to wrap your arms around how brain damaging it is to try to do that thing. But like, people who had done that kind of looked at Marcus from day one and are like, what is it got to do with, like, does Goldman intend to build a consumer lending franchise? Because otherwise,
I'll tell you what though, Austin, I was at Citibank when they announced it. I was in Citi's like retail bank, and people were scared because I mean, notwithstanding everything you said, because they know how banking works and how things have to be segregated, but just Goldman's brand as being like the smart person investment bank where like they could pick whoever they wanted for business schools and stuff. And now they're getting into retail, and that's where the money's going to be made. And this was like, what, 2018, 2019, whatever it was, they launched it. People were nervous about that. Did not expect it to be a huge fiasco like it was.
I will contra that and say somebody who's quite senior at JP Morgan, who's a friend, texted me the day the Marcus announcement came out, and the exact quote is, "They're going to regret it."
Yeah, I mean, it was a complete failure of execution. I mean, I remember those original slides. They were forecasting a return of assets of 3.5% from that business. Never came close to that. Complete failure. It was ego over kind of humility. But back on Galaxy, so I hear your point, Josh. You're saying, look, doesn't Novo hold Galaxy out as Goldman for crypto? Look, Galaxy's a meme stock. Why couldn't its shareholders adopt the app? That's all I'm saying.
Okay. All right. So good discussion. Let's start to wrap up. Josh, one of the things I like to do when I get to host is ask all of my panelists to kind of either share something that was left on the cutting room floor, or just a contrarian opinion, something that they'd like to highlight. Curious what you think, or again, as Ron was saying before, you really have visibility by being at FalconX into like what the smart people are doing right now in this market. Would love it perhaps if you could share like one or two things that maybe you're seeing, or especially if they're non-obvious tokens or strategies.
Sure. Yeah. I mean, I think I got a lot of questions while in Asia, how does this cycle end? And I think it's going to be pretty different than last cycle, right? So if you think about last cycle, and coming back to BlockFi and the question, and of retail deposits basically funding larger trading operations, that was the main kind of downfall for the last cycle, is that the leverage that was afforded by retail deposits in sort of like undersecured lending, that became like pretty endemic to crypto. And I think this cycle is going to be pretty different. And also, if you think about last cycle, like DeFi was sort of untouched in a way. Like DeFi was pristine and performed the way it was intended to. Things like Aave worked just fine throughout the process of unwinding the leverage. I think this cycle is going to be different, and I think it's going to surprise a lot of people. But things like DATs are not inherently that levered. There's some of the treasuries that have converts on them, and people raise that as a point to say like this is kind of concerning and it's going to be the cause of the next cycle unwind. I kind of don't believe it. I think there are some of these equities that do carry debt, but they're being underwritten by banks, and there are sophisticated investors that are buying those converts. So there is some underwriting standard being applied there, and the vast majority of DATs will never be able to issue debt because nobody will underwrite it. So I think that's actually not the cause of the next unwind. I think it'll be actually in DeFi. So what's happening now is a lot of strategies that are sort of like actively managed strategies that are a little bit less transparent are getting put into tokenized formats. So either through like fund tokenization platforms, or explicitly as vaults, or even in some cases being issued as some kind of like a stablecoin wrapper. And these things are then being put through looping strategies, right? So like people are going into something that's maybe like a 10 or 12% yield, but they're borrowing borrowing USDC at, let's say, like 7% to loop that strategy up to something like 25% yield. So when it turns out people become aware that these are not basically like risk-free strategies, I think basically, there's going to be a ton of leverage built up into some of these trades. And that will actually be how, the deleveraging happens this cycle. So it'll happen actually in DeFi, is it'll be like the same sort of issue, which is like underwriting standards being, debased in a way. And I think it'll be because people will be using bad forms of collateral in the forms of some of these actively managed, like tokenized strategies.
Interesting. Ram, how about you?
Yeah. Look, I agree, by the way, Josh, always right on the mark too. So banks are reporting in 2 weeks. So I think getting ahead of earnings season is a good idea. We know mortgage refi picked up. There are a lot of ways to express a view on that. Wells Fargo is a leading mortgage originator. It looks set up well too. But I think the broad base of financials will report and they will crush earnings. Austin also spent a lot of time at banks, and every quarter these banks just crush earnings. And what happens is midway after the earnings seasons has moved on to other topics, they kind of trade down again. But like the deregulatory backdrop around banks is strong. The consumer is strong. We saw GDP clock in strong. Earnings growth last quarter was strong. There's a lot of good things happening out there if you can kind of look past the doomerism. So I think that's an interesting idea, and not just tactically, but also as a strategic investment.
All right, Dr. Campbell.
So I'm going to leg on to what Josh said and say the kinds of things that quote unquote stop this train in times like now are actually unexpected, really bad breaks. Honestly, I think people are watching a lot of DeFi and prepared for that. But one of the areas where crypto has definitely not learned their lessons and continue to do stuff that we know not to do in some areas of the traditional financial system is like single point of failure risk. So if, like, understanding how sophisticated, and by sophisticated I mean incredibly sophisticated, some of the threat actors are out there in this space. The kind of thing that's going to break the crypto rally badly is like North Korea compromising like Tether Circle's smart contract, right? Just minting $1 trillion, buying all the assets and like sweeping it into Bitcoin. Because that is, I want to be clear, that's the kind of stuff they are actively trying to do right now.
Out of curiosity,
that is
why would
not a
they try to do that,
hypothetical.
since that's what they use to fund their nuclear program? Why would they?
So the answer is, if you're a truly nihilistic group of people who are only motivated by getting a big score because that's how you get whatever you want, you go do that. By the way, you'll notice the North Koreans have a strong preference to taking whatever they successfully capture and getting it into Bitcoin as quickly as possible, right? If you look at how they've swapped things cross-asset, what they exchange things for, if they get stable coins, if they get something else, they're going to swap them. And so I've banged this drum before, but I'll say it again. There's a lot more single point of failure risk in elements of DeFi than people.
So Bitcoin is the primary FX reserve for North Korea? Wow.
I mean, they don't have bank.
Yeah. So Austin, do you think we could get a private key compromise from a major party? I mean, that would be a kind of a left tail risk.
That's what I'm saying is a good example of left tail risk that can't really be.
If you had that,
because if you look,
that would end the DATs, they would all crumble. I mean, everything would just be, it would be like the equivalent of
I'm actually speaking.
It would also end DeFi, right? Because think about it. Every blank against USDC pool is
all
now
the bridges get moved.
If USDC gets compromised, all the bridges, etc. And that's why I raise it, because if you look at the governance structure of a lot of these chains, if that happens on like Ethereum or Solana, they functionally don't have a way to do anything about it, right? Like there may be a hand, for all that people make fun of them for being a zombie chain to raise one of Steve's previous victims. Like there are structures on like Stellar or Avalanche where you can have coordination very quickly between certain kinds of validators to stop that, but most chains are not centralized in that way.
I'm actually speaking at a quantum computing conference in I think a week and a half or so ago, which I think is kind of funny.
Hold on, is that the one that was above the bodega?
The what?
I was like, was that at the headquarters that was above the bodega?
And I always think it's kind of funny because I think you got a C in computer science at my freshman year at Carnegie Mellon, but yeah,
it's hedge for crypto, right? Like if they crack quantum computing, your quantum stocks will go through the roof. Your Bitcoin.
Yeah, but like if they crack that,
terrible idea, but
and they can like compromise like private keys, like that's going to end like all privacy, like finance, TradFi, crypto, everything. So DeFi will be the least of our problems. For me, I guess just the last thing. I saw a couple of announcements today. I think like the Winklevoss twins put money into a DAT. Like I've still seen a couple of like smaller announcements on DATs, and I'm really curious like especially for ones that aren't like associated with like a long tail asset, which I'm already pretty bearish on. I'm really curious, like what's the thought process behind some of those at this point with like NAVs.
Okay, hold on. Pay attention to how people are contributing to those, because one of the things driving the DAT proliferation is, as is always the case in all markets, tax arb, right? Because if I've got Bitcoin with a very low cost basis, I could contribute it to a DAT in kind, get shares back, and go borrow against those shares from sources that I can't borrow against in crypto. So that's a very favorable trade for some people, where they're not really expressing an opinion on anything other than I don't like taxes.
Yeah, and I guess with the assumption that the premiums won't drop below 1 or through.
It does. It's not that it won't drop below 1. It's just that it needs to not go so far that you get liquidated on the loan. And sort of given the fact that if you are a shareholder, you can be your own activist in some ways, that seems pretty doable.
Otherwise, we didn't get a chance to talk about it today, but obviously Grayscale started launching staking for their Ether and Solana ETFs. I'm not a lawyer. Austin, are you a lawyer? I'm not sure. You have so many. You have this professorial look. I almost assume you are. But no, we got to get James back on
TV.
But we're gonna. I think we all expect in a couple of weeks we're going to see a lot of staking come to ETFs, and we're going to have to discuss what that means for the market, but also especially for DATs, especially like ETH and Solana DATs, because their hurdle rate, I think, quote unquote, is about to get a lot higher. But with that, thanks, Josh, for joining us. We'll definitely have to have you back, Ram and Austin, as always. Thanks, everybody, for watching and listening. And we'll be back next week with another episode of Bits and Bips.